Those are some of the numbers of UPL, but let's also get in a check on Yes Bank, and the press conference is just going to begin in some time.
Exceptional numbers by them as well, right?
Yeah.
Yes Bank, extremely good quarter, and Rana Kapoor should be getting ready. And I must say, from a perspective of the bank nifty of the markets, it was good. It's, of course, nowhere close to the size of ICICI Bank, but it was good to have a private bank which comes out with a good quarter after the howler that ICICI Bank has come out with. So, all smiles, Rana Kapoor, and has reason to be. Typically, we don't see him come in and address results. So, let's wait and watch if there is some announcements that he has to make in this press conference aside of the numbers as well. It's a bit of a surprise. Typically, we have Rajat Monga coming in. This time around, Rana Kapoor has come out himself to address the media. So, it could be interesting. But, decent enough numbers for Yes Bank. By the way, Supreme Court has dismissed Centre's plea against Sun TV's participation in Phase 3 auctions. This is good news, and Sun TV should be reacting as well. But let's go across to Rana Kapoor.
Yes Bank headquarters this afternoon, on a Friday afternoon. We have just finished our board meeting and have discussed our results for the quarter. I'm very pleased to announce that this quarter, against the backdrop of a very tough economic environment, with all sorts of challenges relating to asset quality issues. Against some of these challenges, our bank has been able to produce what I would like to believe is an extremely satisfactory quarter, with a net profit increase of 25.1% at a level of now 675 crores. The net profit increase has also been accompanied by an increase in net interest margin to 3.4%, which is a sequential increase of 10 basis points and a corresponding increase in NIM of 20 basis points compared to last year. Equally, the fact that our net interest income in this quarter has increased by 27.3% and has been fairly steady. It's a steady annuity income, as I'm sure all of you know. This has resulted in an overall improvement in our ROA to a level of 1.8% from 1.7% in the previous quarter, sequential quarter. And our ROE is back into the 20s at a level of 20.5%. The book value of the bank has increased further to a level of 323 rupees. The CASA growth, I'm very happy with this number, has grown by 45.1% compared to last year, and the CASA ratio has improved from a level of 22.6% last year to 26.6%. So it's a solid increase of 4% in the last 12 months, and sequentially, CASA has improved by 1.2%. So we're very happy with the CASA run rate, with the accretion of savings accounts, as well as, low-cost current accounts, which are accreting quite well. The other important ratios are the capital adequacy of the bank, which now stands at a level of 16.1%, with the Tier 1 ratio at a level of 10.9%. There is a lot of attention, as we all know, in the Indian banking system on asset quality, and I'm happy to report to you, as in past quarters, that Yes Bank has been able to demonstrate preservation of asset quality with an overall gross NPA at a level of only 66 basis points, which is quite remarkable in the current market circumstances. And the net NPA is at a level of only 22 basis points, with an overall coverage of 66%, overall provisioning coverage of 66%. I do want to mention that the credit cost of the bank in this quarter, factoring in a certain asset quality review undertaken by our regulator, as well as our internal reviews, has resulted in a credit cost of 14 basis points in this quarter, compared to 13 basis points in the previous quarter, and the cumulative credit cost of the bank for the first 9 months is 34 basis points. So 34 basis points for 9 months, and the management is of the view that the credit cost of the bank, which was projected earlier in the year at a range of between 50 to 70 basis points, I am today confirming to you that the management forecast for this fiscal year, with one more quarter to go, so the overall credit cost of the bank is being reduced from 70 basis points on the outside to now 50 basis points, considering whatever we have by way of additional provisions that we need to make for the remaining quarters. So this is a very important number. So instead of 70 basis points overall credit cost, the management is reducing it to 50 basis points based on our overall portfolio composition. I'll move on to some of the other issues related to our overall balance sheet performance. The deposits of the bank have increased 23.1% and have crossed 1 lakh crores, so it's been quite a milestone to cross deposits. First time beyond 1 lakh crores is very meaningful for our bank, which is just about 11 and a half years old. The balance sheet overall has grown by 19.8%, and the CD ratio of the bank was 83.2% for this quarter. I've already discussed the CASA numbers with you, but the SA ratio, the SA composition in itself, year on year, has increased by 64.1% and now stands in absolute terms at a level of 17,869 crores. Moving on to advances, this quarter, our growth was 26.7% compared to previous year, and our total advances book is now at a level of 84,396 crores. We are predominantly at this stage, a corporate bank, but gradually the pendulum is moving, and the overall retail and SME composition is rising, as evidenced by the fact that our corporate banking overall composition is now at 67.2% compared to 68.7% a year ago. And the retail and business banking business, which is led by Pralay Mandal, has now stepped up to a composition of 32.8% relative to 31.3% 1 year ago. So we are seeing fairly steady increases, and this is a business we want to build with the right quality filters, with the right systems and processes, and therefore this will ratchet steadily, and we will not see too many swings in terms of growth of this business. I do want to move on to asset quality issues. In our submission to you a little while ago, we have also presented to you the sectoral distribution of our advances composition. And as you will see, that the bank is fairly well diversified. Our loan portfolios are fairly granular across almost all aspects of our GDP. But more interestingly, if you see the bank's certain focus sectors, our knowledge sectors, they do occupy, maximum intensity in our sectoral distribution. And this is an area where it's very important to understand, because this is a very genetic thing. The bank has specialized relationship managers focusing on certain sectors. It has product managers accompanying them, invariably also who are industry specialists. And more importantly, even risk managers who are deployed with sectoral and industry specialization. So practically every relationship, small, medium, large, gets the look of three different specialists in the bank who are amongst industry specialists. So this is one way of doing better business, quality business, and at the same time, when there are difficulties which we incur in our business, naturally, the bank can afford to be more proactive and be able to redress problems more energetically, more proactively, because of this specialization that we have built as a cornerstone of Yes Bank's strategy of knowledge banking. So this is a very key differentiator, and we are scaling that up in the bank as we now become a small, large bank from having been recognized as the largest medium-sized bank till very recently. On specific asset quality issues, first on sensitive sectors, electricity has been a sensitive sector, although I have reason to believe that the outlook, thanks to some fantastic measures being taken by the government, is improving. So our exposure to electricity in totality is about 9.1%, of which the portfolio of AAA and AA rated instruments is about 1.6%. The bank specializes in renewable energy. I'm sure most of you know that. And that in itself is a very significant component of 3.1%, which is green financing. And we also have about 3.1%, which is non-renewable, but of that, 2.9% is operational assets. So these are not stuck assets, but performing assets. I'm also happy to share that as in the past, we have no exposure to the SEBs for quite a while. Iron and steel, which is a portfolio sector which is caught.
Okay, that's of course Yes Bank on their numbers. This is PVR on their numbers, flat. I think the stock of the moment is Sun TV, quite frankly, with the kind of announcement that has come in on that one. PVR is ho-hum. I think the numbers are pretty much in line. Actually, slightly better than what we were working with, but the stock is not really reacting. But Sun TV is